Listen up, guys. What I'm about to show you is not the best sign overall for the Bulls, and it goes to show that the Bears might still have a tight grip on these markets. We're going to break down a bunch of charts in this video, go over my thoughts on the markets, what I'm doing, am I buying, am I selling everything, holding on. So if you guys find value, all I ask is to hit that like button and consider subscribing if you guys want to see more stock market content like this, individual stock breakdowns, chart breakdowns, earnings reviews, and a bunch more. This is the channel for you, so subscribe. And with that being said, cheers, guys. Let's dive into it. So I'm sure you all know at this point, the markets have done pretty well over the past couple of months. Pretty much this entire year, we've been doing pretty well, right? After 2022 was a complete disaster overall for the S&P 500, the Dow, the NASDAQ, the Russell, you name it. 2022 was not a good year at all. And so far in 23, things have done pretty well. You guys can see the S&P 500 here, looking at SPY, was right around 380, 385 to start the year, and now it's at what, 412? So that is up around 7.5%, 8%, not including dividends, which dividends, what the heck's the dividend on the S&P? It's like 1.5%, something like that, give or take, whatever. I mean, it's something, right in that ballpark. So that's without dividends included. 7.5% roughly is what the S&P has gained this year. And Triple Q, which you guys probably know, tracks the NASDAQ 100. This has gained around, let's see, it started off the year roughly, and these are rough numbers, guys. We're not, it's not the exact return of this year, but Triple Q to start the year was right around 270, let's say. Now it's at 326. Just price appreciation, it is up over 20%, which is great. You guys might be super excited. It makes me excited, right? It's awesome that stocks are moving up in a major way. But guys, to play devil's advocate, if we take a look at the larger time frames, they actually paint a different picture. And the reality is of bear markets, guys, is we see many bear market rallies throughout the bear market. And these rallies could last a couple of days, couple of weeks, and sometimes they could last a couple of months, like we've seen so far this year in the past couple of months. It's the middle of May right now, so about 5.5 months, we have done very well. Like I said, Triple Q's up 20%, and we have SPY up around 7.5, roughly 8%, and that's not including dividends. It's probably up, even more. Well, it is up even more when we're including dividends. So what I'm trying to get at here is, guys, and mind you, SPY has been struggling to break out of 417 for months, pretty much all year. So we did very well in the beginning of the year, but pretty much since, February, the markets have been flat. I mean, you guys can see we started off the year again on SPY at around 380, and mind you, we actually dumped into the beginning of the year. So we really have not gained anything on SPY this year if we're looking at where it was in the middle of December. You guys can see in the middle of December, SPY was at roughly 413. Then it dumped down to around 375, 380 to start the year, and now we've just recovered that entire loss that we saw in this blip of a time period right here. You guys can see from the 13th of December, we went from roughly 413 down to 375 by the 20th of December. So literally, guys, the price action we've seen this year, the upwards momentum we've seen, just all it's really done is it just recovered the loss from that 1 week of trading. That's pretty crazy if you think about it. If you think about it that way. Again, SPY went from 413 to 375 in 1 week, and it's taken 5.5 months essentially to recover that entire loss, and we're pretty much right back where we were in the middle of, back from the middle of December, which, it's good. We are up on the year, but putting it in that, perspective, it's not that crazy. We're still pretty much break even compared to where we were in the middle of December. And now that I'm looking at it, where we were by the end of August, early September, where SPY was at about 420. Then it went all the way to 350 from there, as I'm sure you guys remember. And of course, we've recovered all that loss. Now we're back again to that 415, 420 level. So, the S&P 500 has not been doing as great as a lot of people might think. And pulling up the 3-year chart here, guys, we are still technically, yes, you heard it right, and you're seeing it right here, we're still technically in a downwards channel. You guys see that, right? This is not the best sign overall for the bulls. And like I said, time and time again, throughout the past couple of months, and I mentioned it in this video, we get bear market rallies within bear markets all the time, whether it's a couple of, days we get a rally, couple of weeks, or a couple of months. And in this case, this could be a couple of month, a multiple or a multi-month bear market rally. And for all we know, guys, we could be rejected right where we are now. In fact, we already are getting rejected. We're seeing the resistance as we have been struggling to break out a 415, 420 for literally months. We're talking almost a year at this point. We've been failing there on SPY. The last time we were above 420 was back in August. And guys, newsflash, it's the middle of May right now. We're almost in August again. That was almost a year ago. So yeah, this chart makes me a little bit nervous on SPY. It makes me realize, we're not really in a bull market. I mean, this could very well just be a bear market rally. And sure, if we start breaking out of this channel, we start taking out 420, we start breaking the highs from August being 430. All right, at that point, maybe we could start fully reversing and heading back towards, 460, 475, 480. Maybe we go to all-time highs. That is definitely in the cards. But right now, we're just not getting that breakout. We're just not. We've been struggling at 417 for months. And what I believe will push us through that point, it's, to be honest, the rate cuts. If we get rate cuts, which at this point, guys, Powell has said time and time again, don't get too excited about rate cuts because we're still seeing pretty sticky inflation. It's not going to come down as quick as a lot of people think in terms of inflation. So we might not get a rate cut for another year, maybe a year and a half. I don't know, maybe less than that. I mean, time will tell. But overall, that is what I believe will move SPY to start breaking out, or maybe some other catalyst comes along. I don't know. But at this point, we're still trading in this channel, which to me, guys, is not a good sign overall for the bulls. And the fact that, again, we failed at 417, 420 for months, that's not a good sign either. You guys can see all these points that have been hit and we've gotten rejected, and we're at one yet again right now, right here at 415, 420. And it's the same thing pretty much on Triple Q, which you guys know tracks the NASDAQ, right? You guys see, yes, it's above the moving averages. Yes, we're starting to break out of the highs. Actually, no, we're not, but we're testing the highs from August. We're not out of them yet, but we're testing them. That's great, but we're still trading in this downwards channel. You guys see it clear as day. We have lower highs being made, and we're technically at one right now. This is a very pivotal spot overall for the bulls. And if Triple Q could break out of 330, maybe it starts going 340 plus. All right, maybe at that point we do start getting the reversal. But as of now, by the looks of it, in my opinion, this is not the best sign for the bulls. The rally, I'm not saying it's coming to an end completely. We're going to dump to all-time lows or something crazy like that, or not all-time lows, but I'm not saying we're going to dump 50% from here or anything crazy. All I'm saying is you got to be mindful of this resistance, and if we don't break out of this point, we could be setting up for a sizable move back to the downside, maybe down to 290, maybe down to 300 flat, maybe down even under that point. So yes, we've been doing very well these past couple of months. It's all nice. You might think it's all sunshine and rainbows, but once you peel back the layers a little bit, you're going to see, wait a second, maybe things aren't as great as they seem, at least here on the charts. And, a lot of this has to come down, or a lot of it does come down to the Fed, to interest rates, how inflation is going to, do over the next couple of months. A lot of it comes down to that. You know that. I know that. Everybody and their grandmother knows that. And I guess time will tell. Guys. But as of now, we're at a very pivotal point on the 3-year chart, and that's what I really wanted to cover here in this video. So if y'all found value, hit that like button. Make sure to subscribe. And if you guys want some free money, don't forget to get up to 15 stocks from Moomoo, each up to $2,000, guys. You can't beat it. Use that link down below or go to StasSurfS.com/Moomoo. Once you guys open up an account, you get 1 free share of stock right off the bat. And once you fund your account with at least $100, you get 4 more stocks, totaling 5 stocks. And once you fund your account with at least $1,000, are you guys ready for this? You get 10 more stocks, totaling 15 free stocks. So if you guys want some free money and you want to help out the channel, use that Moomoo link down below, or again, go to StasSurfS.com/Moomoo. I appreciate you guys as always. Don't forget to also get 12 stocks from Webull. That's more free money. And you could also check out the Patreon if you guys are interested. And with that being said, cheers. I'll catch you all in the next video.